Well, for a few minutes on Tuesday, the chipmaker Nvidia was part of an elite club of US companies worth $1 trillion. The company's share price shot past $412 on Tuesday after rising more than 30% in a week. Other companies that are part of this club are Apple, Amazon and Alphabet. The BBC's North America business correspondent Samir Hussain explains why.
For a brief few moments, Nvidia was able to call itself a $1 trillion firm. The surge in the company's share price came after the chipmaker shocked analysts by forecasting a surge in demand for its products because of advances in artificial intelligence, or AI. Now, the hardware made by Nvidia underpins most AI applications today, with one report suggesting it has cornered 95% of the market for machine learning. Now, over the past 12 months, Nvidia's share price has more than doubled. Investors are betting the company will be able to profit from its foresight in developing chips that are easily adaptable. And of course, AI is the next hot thing in tech, and certainly an area with a lot of growth potential. But now there are questions about whether Nvidia's ability to keep up with demand, especially as other chip makers like Intel and AMD try to get in the game.
Well, Wall Street sales estimates for this firm were more than 50% out. Morgan Stanley describing Nvidia's outlook upgrade last week as the largest dollar revenue upside in industry history, adding, "We simply have no historical precedent for the magnitude of this step function." So just who is Nvidia and how did it rise to this position? A question I put to Fiona Cincotta from City Index.
This is a company that's been very much focusing on chips. It's been very much involved with the chips that were used for mining cryptocurrencies, for example. And the chips that it's created are those that are very much used for the generative AI. That's very much where it's been directing itself. It's been directing itself in this direction for a long time, perhaps before other chip makers and other parts of the industry were even considering. So it's very much behind the AI drive, if you like. And that's what sort of made it the poster boy, if you like, for this wave of enthusiasm for AI. And that's what's sort of, as well, seen the share price absolutely rocket on this expected demand. But this isn't the first time that we've seen the share price rocket in this company. If you have a look at their chart, it's been a company which has had some very strong gains followed by very big losses across the years. But I mean, over the past 5 years, though, the share price is up 500%. So that does say quite a lot, though, over what it has achieved in recent years.
Yeah, and you mentioned it there, you touched on it, the volatility in this share price. I'm just looking at what happened last year. Shares lost half their value last year. Investors sort of fretting about the whole slowdown in corporate spending and things like data centers, and also sort of, I guess, you could call it the post-pandemic free fall that we saw in crypto and in gaming as well. So, I mean, I guess my question is, how much intrinsic value is there to this firm, and how much of this is hype because of what's going on in the world and what people are interested in and where the money is currently flowing?
Yes, so that's the $1 million question, or the $1 trillion question, if you like. Is trying to figure out exactly how much of this is actual hype, how much of this is actual foreseen demand. And they have increased their revenue outlook on the back of increased orders. So there is definitely something behind here. And as we said, they've cornered the market. It's very much they are the stock that are able to ride that wave as we speak. That's not to say that won't change in the future. There won't be other competitors, which I'm sure there will be. You know how quickly, especially in technology, the landscape can change. But this seems to be the stock that is going forward. And that's on the back of what they say is a huge rise in orders. So there do appear to be some numbers. But as we say, this is still guidance. Perhaps until these numbers actually start coming through, which they will be coming through very quickly. We're not talking about having to wait 10 years to see whether this is going to pan out. This is something we're going to be seeing in the coming quarters. Then that's when we're going to really have a good idea as to whether this is just a bit more of hot air or whether there's something much more substantial to it.